The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 13th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. You know, what you think about, you bring about, and what you focus on grows. That's what our fearless leader tells us. And I think there's much that we can learn from him. You see, there are 6 steps to become what it is that you think about. So I want you to try this out for 30 days because it can change your life. Step number 1, write on a card or your memo pad on your phone what it is that you want more than anything else in the entire world. Make sure it is a single outcome that is clearly defined. Number 2, don't show it to anyone, but carry it with you each day and look at it several times a day. Heck, how often do you look at your cell phone out there? That becomes pretty easy to do. Number 3, think about it in a cheerful, relaxed, and positive way each morning when you wake. That should be the very first thing you do. Number 4, look at it before you go to bed at night. And as you look at it, remember, you must become what you think about. Use that imagination of yours. After all, it is the strongest nation on earth. Number 5, this is the difficult part. Stop thinking about what you fear, because each time a fearful or negative thought comes into your consciousness, what you want to do is replace it with a mental picture of your positive and worthwhile outcome out there. That's what you want to do. And finally, number 6, each day of this 30-day test, which will soon become your rituals out there, do more than you have to do. Take control of your mind, knowing that your returns will be in direct proportion to what you give. Yes, folks, as Tom O'Brien has taught us, what you think about, you bring about, and what you focus on grows. Well, let's go focus on the markets out here. Right now, the Dow is off 37 points. The S&P is down 3. NASDAQ Composite turning just slightly green, up 50 cents right now. Russell 2000 down 70 cents. NASDAQ 100 up a couple points. New York Stock Exchange off 20. Everything trying to fight off the move lower in the marketplace. Let's start off by taking a look at the 120-minute charts out here. Let's look at the euro, Japanese yen, see what it is doing out here. We're taking a look at the long-term descending price channel out here. This is established, taking us back into December of 2013. If this market is going to try to bust out its highs, it is going to go ahead and need to bust through this area. We can see we had a couple of reversal signals out here. We had a shooting star. That took place at 9 o'clock in the morning a couple of days ago. We had a nice wide-ranging bar to the downside. That took place yesterday morning at 7 o'clock. We've seen a couple attempts to attack that descending price channel, a price not being able to get above that area. That says, okay, time to be careful out here with regard to the, so what we're seeing here in the marketplace until you see the euro, Japanese yen confirm a move out here. It says, be careful. Let's go take a look at the Dow. Dow futures out here. Here is the Dow futures. Here's a rising price channel that it had formed coming off of the bottom. That's the bottom out here. I would say the low that came in at 12 noon. This is a 120-minute chart that we're looking at. And that low out here at the 15,276 mark. It makes a 0.618 retracement. That 0.618 retracement is coming here off of the high from 10 o'clock in the morning back on January 21st. So it runs from that high down to the low. It breaks a descending price channel out here. So here was our descending price channel that was out there. Now we're seeing a move. Then it created a rising price channel. We saw a break of that. That took place here this morning at 2 a.m. Now it looks like what is taking place is that it looks like price is going to try to get back into that price channel. That is a normal move when it tries to go and get back into the price channel out here. Inside of the Dow futures, that's probably, about another 40 points higher or so from where we are at right now. We'll know when we see it. But it has broken that price channel out here, and now it's doing its normal move. Let's take a look at when it broke the descending price channel back here, which was on 6 o'clock in the morning. That was on February the 6th. We saw two tests, so we saw a 4-hour period of time of testing that to then confirm that it wanted to move higher. So now we may be seeing that same kind of a test take place here inside of the Dow futures and taking a look at that 120-minute chart. If we take a look at the ES Mini, it has not broken its rising price channel out here. Let me move this off to the side. It attempted to. It did not get down there. Right now it's up trying to get up against an area of what should be some resistance, an important area, which is the 1814 level. But the ES Mini has not broken its rising price channel. If we do see it break that, now what we are doing, if we just take a look at retracements now, and that retracement coming off of the high out here at 12 o'clock noon yesterday, 1823.25, down to the low that was put in here. And again, it's a 30-minute chart that we're looking at on my screen for the ES Mini. That takes, it's the 120-minute chart, which, by the way, it's also formed a hammer candle. So now we've got also an important signal out here. So far, the 0.618 retracement level, 1815.25 out there. So far, intra-session, we've been up to 13.75. So it's doing its normal bounce, if you will, out here. Now, what's important, I'm going to go ahead and expand this up. So here is a very important signal for us to be paying attention to today, and that is this little hammer candle here that formed during the 10 o'clock session. That says, as you know, if you break the lows of a hammer, which is 1802.25, so that's the low of that session. If you're long, you are wrong. I suppose what this is really telling us is that if you break the lows, not only will you break that descending price channel out here, you would be forming some type of A to B equals CD down pattern. This is on a 2-hour chart out here. However, if this holds, this will be an important level to be paying attention to, that hammer candle inside of the 120-minute chart for the ES Mini. Let's go take a look at the NASDAQ futures, see what they are doing out here. NASDAQ futures here yesterday getting up to the highs, making a 100% move of a move. The highs coming in at about 10 o'clock in the evening, 12, that would be 8 o'clock in the evening. That was on January 22nd. That price point of $36.35 and a quarter. So it made its move of a move. I've gone ahead and moved the line down just a tad out here. Looks like it's going to try to take on that area one more time, or at least one more time. And that is going to be the high here at about 36.33.50. That is on the NASDAQ futures. Let's go to Bill in Littleton, Colorado. Bill, thanks for calling. Thanks for holding. How are you today?
I'm doing pretty good. How about you?
I'm doing just great. Thanks so much for asking. You want to take a look at Goldfields, I believe, GFI. Is that correct?
That is correct. Yeah.
Tell me what you're doing, how I can...
I'm in it, and I've got a small profit right now.
Okay.
And the gap down this morning worried me a little bit, and it's come back, of course. They came out with earnings today, evidently.
Oh, did they? Okay, let me see what they did here. So we're taking a look at GFI coming out with earnings. Let me see here. Well, tell me what you're doing, how I can help, and then I'll see if I can. I'll see the earnings information.
I have a projection of about 450 to 460 in that area somewhere. That's where I was looking for it to move to.
Okay,
and
all right.
I don't know if that's reasonable or not. I want to get your opinion.
Absolutely. So thanks for calling, and let's take a look at it. So we're taking a look. Ticker symbol is GFI, folks, and if we take a look at it, this thing had a nice little sign of strength that was making the highs here 2 trading sessions ago, as did most of the mining stocks out here. So the behavior that we saw inside of this equity, similar to what we saw 2 days ago, February the 11th. So that is a positive sign. Makes a high with 10 million shares. Let's see what this was actually trading into. We'll go over to the left. And it was trading into the December 3rd, the December 2nd area, and those only had about 6 million shares out there. So that's a positive. Your target out here, you said, was about the 450-ish type range or so?
Yeah, 450, 460.
Yeah, I would say that's a nice target area for sure. That would take you to this high volume bar from September 20th. So that is that's a low of about 465. So that seems like a pretty good area. Now it backed off. And it needed to really back off. The trading session on February 11th, Bill, when it was moving higher, it was also moving into the overbought condition, as was most of the gold stocks out there. And so what you're looking for there was you were looking for it to actually work that condition off, which it did yesterday. Yesterday had an inside day out here. Today, obviously, as you pointed out, gapping down a bit. So it's no longer on the daily chart. It is no longer overbought here. So that's a good thing. If we take, where's your stop? Can I ask you where your stop is, by the way?
I was going to put a stop in about 460. I mean, 360.
No, I mean to the downside. In case this trade moves against you, where would your stop be on this?
360.
360. Okay. So that's good. You've got a little bit of a gap right at 360 from February the 10th out there. So depending on where you're at in this equity, you might want to even consider. It's not that 360 is a bad stop or anything. You might want to make it a few pennies below that in case that gap were to be tested. What you want to see today, though, is you want to see, because it's trading back into that February 11th area, you'd like to see it do it with more than 10 million shares. And you've done 2 million shares already today. So that's a positive because we've only been trading for 45 minutes. And so long as it trades into the session with volume, that's a very bullish sign out here. So it doesn't have to break the highs of $4.03. You would like to see it break that high with volume to confirm an A to B equals CD up. If you were to get that, Bill, that A to B equals CD up pattern, I'll use the conservative one, that would say about 470 or so. And how I would trade this, if you were to get that, if you were to get a confirmed A to B equals CD up, the way that I would trade this is I would just continue to adjust my stop.
Right, okay.
I still keep a target exit. You want to have both sides of the trade in there. And it's just this high volume bar here that I was going back to from September 20th for you. There's no wide price spread or anything there. So, hard to say whether that, and right at that level, which is 465, the low happens to be your A to B equals CD up. So, so far things look okay out here. The thing is, if you see the market turn to the downside, and I mentioned this too because we're in a couple of gold equity or mining equities in our newsletter here, and I mentioned this to subscribers this morning, is that if we do see a market turn, and the market turn today, Bill, would be if you were to see net declining issues in the New York Stock Exchange of more than 2,118, that would be telling we had a big reversal day out there. And you know what? If that's the case, you could see all these great mining equities also get taken to the woodshed too. So I think you're trading this properly with regard to your stops and your exit. Everything looks pretty good to me.
Thanks a lot. Appreciate your help.
Hey, you betcha. And Hank, thanks for calling. Have yourself a great day. That was Bill in Littleton, Colorado. We were taking a look at Gold Fields. I do see they were out with earnings, but I don't see what they were. Right now, we've got the Dow trading up 23 points, S&P down a point. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 30 points. S&P is down a couple out here. And had a great question email I saw during the breakout here from one of our listeners. And the question was 100% move of a move. The question was, I hear folks talk about a 100% move of a move here at TFNN, and just exactly what does that mean out here? So great question. So we're going to take a look at the NDX 100 because that is the chart here that most recently has made a 100% move of a move. So if you're watching us on Tiger TV, in fact, let me get rid of a couple of things out here. We're just going to clean this chart up altogether, get rid of the cycle bars. Let's get rid of that moving average out here. Now, I'm not going to get rid of the 3 drive to a top pattern. Now, when you are trading, what you're looking for is logical areas of support and resistance when you enter a trade out here. And that becomes your target line. And that target line is a swing point where you've seen a significant change in trend in the marketplace. So if we take a look at the NDX 100 out here, we're going to say the NDX 100 was moving up all the way into the January 22nd level. It got up to 36.34. You can see that there was a significant change in trend. It goes ahead and it makes a beeline down to the lows that were put in here. This low was put in here on February the 5th. Now, when it was moving down, let me do this. I'm going to get rid of this. We're going to have a clean chart now. Now we got a clean chart. In this case here, if you can remember back to December 18th was the day when Bernanke came back onto the air. The FOMC was kind of like his going away party and said, no, I really did mean that we were going to taper, and he had all of his guns, because the first time around he didn't really have his guns in place to make sure that the market was stabilized. But let's not get there. So December 18th is a swing point. You can see the market would push lower, and then just simply, that was the Santa Claus rally, because from that point in time, the market basically made a beeline up into the December 31st time frame out here. Now, this becomes a swing point as well. This is why we say right now we are probably in some type of consolidation inside of the NDX 100. So let's come all the way back. Let's fast forward. My apologies for, we want to be able to define swing points first, or at least key swing points. So let's say back here at January 22nd, you saw some types of signals to go short the marketplace, whatever they might be. Your target areas for the move down would be swing points. One of those being right back here on January 13th. That was a 100% move of a move. The market pulls down into the January 13th level, and see it bounced just a bit. We had that one-day wonder out here, which was on January 30th. And in fact, and then the market went ahead and moved down to that all-important December 18th time frame. There's your 100% move of a move. It's perhaps easier to even see, though, on the way up with regard to what it is that we did yesterday, what it is that we're doing right now. So when the market did begin to reverse here, after it goes ahead and it makes this nice bear separating line candle right here. This is on the NDX 100 that we're looking at and which is a very bullish candle. That's on February 6th out there. The market goes ahead, and your target area is either going to be some retracement level. Whoops. Grab the wrong tool out here. But your real target, your ultimate target, is going to be that it's going to make a move all the way back to the swing point high. That swing point high in this case here happens to be the January 22nd level. When a market makes it all the way back there, that's what we refer to as a 100% move of a move. And that is typically where prices will pause, they'll stop, they'll do something different out here. If they don't, what they're going to do then is they're going to do an expansion. That's when we start taking a look at our Fibonacci numbers, and we start taking a look at expansions of swing points. So in the case of the NDX 100, let's take a look at the bullish side of it. The bullish side would say, okay, it takes this level out. It gets above this swing point here from January 22nd at 36.35 out here. And if we wanted to get an idea of where that could move to, what we'd be looking for is we'd be looking for an expansion. The first expansion level that we would take a look at would be 36.93. That would be your 1.272 expansion. Another level that you would take a look at might be the 1.618, which would be 37.68 out there. So that is what defines a 100% move of a move, which is getting back to a prior swing point. And really, I probably should have just kept it easier here with regard to not confusing you, because of just focusing on January 22nd out here from that high down to the low here on February the 5th. Now, in putting that all together, let's say you were taking a long position in the marketplace, then you start to monitor what happens during those key retracement levels, 0.382, 0.618, 0.786, the 100% move of move. And you also want to be paying attention to the volume as you're moving into swing points, much like Bill and I were doing when we were taking a look at Goldfield's GFI out there. When we come back, we'll go take a look at the Qs, since we're talking about the NDX 100, and then we'll go take a look at the volume as it was and as it is battling that swing point again today. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow trading down about 45 points right now. S&P down 280. Now let's switch over. Let's take a look at what the Qs were doing here this morning. And I've got a 10-minute chart on my screen. Now, one of the tools, now, what the Qs have done is on the 10-minute chart, they've also made a 100% move of a move. We'll go back and we'll switch back between a daily and the 10-minute chart out here. But what the Qs actually did this morning as they moved down, as they gapped down, and we're taking a look at a 10-minute chart again, they made a number of, the price point that it gapped down to, they made a number of Fibonacci retracements and one expansion of swing points. And the way that you calculate that is with regard to expansions or contractions, you're looking for, what I'll call an anchor point. And an anchor point in this case here is going to be a swing point. That swing point inside that we're using our measurements from, inside of the Qs is going to be this swing point here from 10:10 a.m. yesterday morning, that price of 89.17. So from that high, okay, if you will, we use that high as our reference point. If we come and take a look at a swing point down here at about 2:30 in the afternoon on February 10th, if we go from that low, which was 87.67, all the way up to the high, that anchor that we're using, we'll see it was a 0.618 retracement. If we go back a little bit further and we use a swing point here from 3 o'clock in the afternoon, that's on February 7th, all the way up to that high, we had a 0.382 retracement. If we take a look at this little doji swing point here that took place on February 11th, out at $88.62 up to that same high. Guess what? We get a 1.618 expansion out there. So there is strong support at that level on the 10-minute chart out here for the Qs. Now, I'm going to go ahead and get rid of that on my screen out here. Take a look at what was going on with regard to volume out here. If we take a look here at the swing point, which was also a bearish engulfing candle, was also a key reversal session here on the 10-minute chart. That took place yesterday at 10:10 a.m. That was a signal that the bears were making signs. That says that really becomes resistance. You're using that as a resistance level out here. A close above that says that the bulls were able to take out the resistance of the bears. So we know where the bears are hiding out just simply because of the signal that they formed yesterday. Now, at 10:10 a.m., the volume on that trading session, as it was making a high, rather light, 1.2 million shares out there. Now, what the Qs did here, as they were coming in at 10:20 this morning, they were coming in with more volume, 1.4 million shares. We saw that it failed on price, but it has not failed on volume. So what does that mean? That means to me that level should be tested again. We saw a little bit of a back off here, but no volume or anything to the downside. Now, this was a test of that same area with only 793,000 shares. So now you're saying, oh, wait a minute here. We just had a test of this key reversal session, this bearish engulfing candle at 10:10. That had 1.2 million shares. The first test up here was with 1.4 million shares. The next test up here was with only 793,000 shares. The bulls are kind of losing some conviction. Maybe the bulls are listening in on TFNN and they realize when you do a 100% move of a move, you oftentimes are going to do something different. So we'll have to see here this next candle. We're going to see if we get some type of feel, because we've got, if you will, conflicting signals here between these two candles. But we do, on a 10-minute chart, have a test of that key resistance level on lighter volume, and we have seen a failure out there. So what does that say? That says, well, if this level fails, then where the Qs ought to move down to on the 10-minute chart is make a 100% move or some type of retracement. So it says that if it gets down to the level here of $88.30, that's what you want to be really focused on and paying attention to. That's what's going on inside of the 10-minute chart. Inside of the daily chart now, yesterday was a doji candle. This is a real doji candle. You can see that the open here was at 88.97 and the close was at 88.97. You can't get any more solid with regard to a doji candle on that one. The open and the close are exactly the same. Now, is that an important candle session? And the answer is absolutely, because dojis at resistance are very important. They tell you the message that the market has lost its steam and lost its energy. Now, volume yesterday in the Qs, not too bad, 32.5 million shares, and it was taking it out. This is not a doji candle here from January 22nd. Looks like a doji, smells like a doji, but truly is not a doji candle, but it is a swing point. And that is a high of $89. 89 even, Steven, 29 million shares. So yesterday, price was moving up into it with 32 million shares. That says that what you should expect, even though you had a doji, was another test of that level. And that's what we've seen here so far today. Now, today, you've got 13 million shares. We'll see which way this ends, this trading session here, the day ends. What you want to see if you are bullish is you want to see a close above yesterday's high, because that actually marks as resistance, with that being a doji, and that is at $89.17 out there. So that would be very bullish. Bearish, you want to see a close lower than yesterday's close, period. Doesn't have to get below the candle, but a close lower, which would be anywhere between 88.97 would be a bearish type of a look to. The Japanese have an expression that the leaves would be falling from the trees out here, and that would be with a lower close. So that, I hope that covers a 100% move of a move. Swing points as things are moving into it, and at least that is Stevie's call on what all that means out there. Now, we haven't taken a look at the metals market out here other than with Bill taking a look at GFI. So let's go do that. Let's take a look at Goldilocks and silver. Let's go see what they are doing here today. Right now, gold is up about $2 and change out here. If we look at the gold contract, let's see what pops up on our screen. We got the continuous contract on my screen here right now, and that is showing that this is just kind of squeaking its way higher. Looks like it wants to get to 1311, then 1333 to 1361 is really the range that it wants to move to. 1361, the reason why that is a target is for two purposes, two reasons. One is that would be your 1 to 1.618, A to B equals CD. oftentimes when you do that type of an A to B equals CD, you're going to have some type of change in trend. That could be a move sideways. It could be a pullback. It could be a complete reversal. In this case here, at that same level of 1361, gold would also be making a 100% move of a move, getting back right here to the level of October 28th. Now, this is a daily chart that we're looking at. October 28th is an important candle session. Why? Because it also marks an area of a reversal. As you can see, on October 28th, the open for gold was 1352.70. The close was 1352.90. Okay, 20 cents. That still is a doji candle out there because the open and the close are basically the same out there. And that says that becomes resistance, 1361.80 out here. You also had, see how the leaves fell off of the tree out here? So let's take a look at gold. And we use this. See, it doesn't really matter what chart that we look at. We can utilize these same techniques to help us understand what the market is communicating to us. It's just our responsibility to read what that is and then to take whatever action may be necessary. So if you take a look at gold here, it was also, as it was making this doji on October 28th, what else was it doing if you look to the left? There's another doji candle out here that was on September 19th. That was an open to 1365, and the close was 1364.90. That was a resistance area. That was a 100% move of a move, as gold had made it back up there. Then what did we see in the case of both of those? We saw leaves falling off of the tree out here. In this case here, leaves falling off of the tree and moving lower. That's why paying attention to what goes on in the Qs today is very important because it had formed a doji candle. Now, what I will say is that in this case here, gold versus the GLD, let's go ahead and pull up the GLD. Let's put these side by side. This will probably do a good job of illustrating the point out here. So on the left side of the chart is the daily chart for gold. On the right side of the chart is the GLD ETF. And let's come and let me try to, let me do this. Let me get rid of everything that was on here. Let's clean this chart. Let's get rid of the volume as well. That way we have kind of equal charts. Now I want to come back to the same sessions out here. So we were looking at, I'm going to pull this back. Here is the October 28th session. So let's take the GLD. Let's go find October 28th out here. Let me widen this a bit. Here's October 28th. So as we take a look at the GLD, this is the candle right here that I'm focused on, October 28th. That is not a doji candle. And this is where, even though I don't necessarily ask you to trade the futures or trade the commodities, you might trade them via the GLD or the SLV or what have you. What you want to do if you want to truly read the message of the markets is you want to have access to that. Because the real message of the market is coming from the underlying instrument. In this case here, the real message is not coming. The GLD is getting its information from the actual gold contract chart. This candle here that was formed on October 28th is a high wave candle. And the true meaning of a high wave candle is just the market has lost its way. It is not used for support or resistance. It just means it's a message that the market is confused. The real message came out here on October 28th when it formed that doji. Let's go see what happens here on the trading session of, where was that? That was moving into this one right here, which was September the 19th. So let's go over to the GLD and see what September 19th's candle looked like. Or September 19th. Here we go. Here is September 19th. So September 19th, here's another high wave-ish type candle out here. A high wave to a spinning top. So here is the candle session from September 19th. It, again, has no meaning with regard to support or resistance out here, whereas the candle session from September 19th, which is right here inside the gold where my crosshair is. And that's why, so that's where I was going with that is inside of the Qs. If we go take a look at the NDX 100, or better yet, if we go take a look at the NQ out here, let's go do that. Let's put them all side by side. Let's just do this. Let's close all out here. So let's put in the NQ first. Out here, we'll put the continuous contract up on my screen. Let's go ahead and we'll put in the NDX 100 out here. We could also put up the composite as well, so we could have them all side by side out here. So here's the NDX. Let's go ahead and put up the Qs, QQQ. Now let's try to squish all of these tile. What do I want? Tile vertically? Yeah, tile vertically. There we go. Okay. Now what I want to do is I want to try to. Obviously, the objective here is to illustrate a point. out here. Let's get rid of the volume inside of the Qs today. So inside of the Qs, if we take a look at it, yesterday they had a doji candle out here. But we did not get the same thing inside of the NDX 100. Here is that high wave candle session out here. So you've got the Qs really getting their message here from the NDX. The NDX did not form a doji candle yesterday. That is a high wave candle out here, which means the message there is the market has lost its way. We cannot use that for a resistance level out here because it just simply does not have that meaning. Now all we can do is just simply use these from a swing point analysis. And then if we take a look at the NQ out here, you can see the message out here. That was not any kind of reversal candle whatsoever. So the point here is that my opinion is understand what's going on, the message of the markets inside of the futures contracts, or especially if you trade any of the commodities and you're using the ETFs for that, that's cool. But go get and you want to really understand the message of what the market is communicating to you or the different patterns that are out there. Make sure that you've got access to that so that you can put that all together. So I hope that helps you out as well. Now, if we take a look at messages of markets out here, I'm going to take a look at the ES Mini. I'm going to put that up on my screen here right now. This is the 120-minute chart here for the ES Mini. The ES Mini yesterday making, and did it while we were on the air, so at 10 o'clock it was making that price relative strength divergence pattern out here. This is actually a dark cloud cover. I don't have it painted in right now with regard to the message on top of it, but it's a dark cloud cover that it did not make the bearish engulfing candle. The bearish engulfing candle would have had closed at least at or below the open of the prior trading session. That would have been a close at or below 1813.50. We did not get that. You got a dark cloud cover. That's like your weather. It's turned on your weather. I don't know if it works like this for you where you're at, but here in Florida, the weatherman, if they're not sticking their head out the window when they are doing the weather forecast, they're not going to get it pretty good. They're not going to get a good idea. I don't care if they got super Doppler or not out there. It's pretty difficult to call the weather in Florida. But a dark cloud candle, that just means there is a storm off in the distance. You want to see some follow through on that. We did not get that in the case here of the next candle session out here. In fact, because of where it closed, if you would go ahead and stitch those two candles together, it actually loses it's very close to losing its entire meaning here as a dark cloud cover. Dark cloud cover has to get halfway into this candle session here. So it looks like, maybe it did it, but you did get the confirmation here on the following trading session here. Inside of the ES Mini on the 120-minute chart, you did get a bearish engulfing. You talk about the battle of the bulls and the bears out here. The bulls are not going to give up easy on this marketplace, and the bears need to understand that. But we do have a reversal pattern and reversal signals here inside of the ES Mini. You got a bearish engulfing candle. That occurred last night at 8 o'clock. You then had a hammer candle that followed up next. That hammer candle did not impugn this bearish engulfing because even if you take a look at where it closed, this was still an engulfing of that entire body that took place here at 5:15 last evening out there. We then saw what? We then saw a close below the hammer candle out here, and that is very bearish. We've seen the ES Mini. It's trading right around 1814.50 right now. That 1814 level is a very key area. This hammer candle, this larger hammer candle, this has a lot more meaning than this small one that took place yesterday evening at 8 p.m. This is the key area. This is the key area because if you are bullish and you see it close below that low, which is 1802.25, it's sending a very negative message to you. 877-927-6648. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is just about to turn green here. There we go, up 13 cents. S&P is up a 1.5. NASDAQ is up 14. Russell 2000 up a couple points. The New York Stock Exchange just about 2 pennies away from going positive out here. If we take a look at the 120-minute chart here on the Dow futures, what we can see here is also a hammer candle that was forming out here during the session we came on the air at 10 o'clock. That says an important low out here to be monitoring. That low is the price point of 15,822 out there. So that is the battleground for where the bulls have defended their position here at this stake. Right now what we're seeing is a counter trend rally out here. Let me go put up the 120-minute chart here for the Dow futures. Give me a moment to pull back over there, and then we're going to go take a look here quickly at a request to take a look at light sweet crude. So let's go do that here in a moment. But let's first take a look at the Dow futures. If we take a look at the as we were opening the show here, we showed the Dow futures here had broken through the descending price channel. And oftentimes when you break a descending price channel, you're going to see price try to get back in it. That's what we have going on here right now at the 10:55 time frame. It is trying to make its way. It is bumping its head into what is going to be potential resistance here. So we'll see what the weak link is able to do out here inside the marketplace. If it's able to get inside the rising price channel, what we'll likely see is another test of its highs out here from the 10 o'clock session of yesterday out there. Now, the volume on that 10 o'clock session, there was 25,000 contracts. It's coming into that area right now with 26,000 contracts out here. So you're seeing the counter trend. You're seeing the test here of the Dow futures on the 120-minute chart. This will be important for us to be paying attention to, because if from a weak standpoint it can get inside there, then that would say, okay, the market is not yet ready to turn to the downside. We go take a look at light sweet crude out here. Let's go take a look at what type of pattern we've got setting up here. Light sweet crude right now is trading out at about $100.19 out here. Yesterday, it made a 100% move of a move. It was a complete test of the swing point from December 27th. That was at 100.75. This thing here gets up to the high intraday of 101.38. It backs off 233,000 contracts, going against 65,000 contracts. So it was pushing into that swing point with volume. Light sweet crude here will have cracked when we see a price that moves below this rising price channel. If we take a look at price channels out here and light sweet crude, this is why you want to draw them in. Take a look at light sweet crude out here. This is not about being able to call the top or the bottom, but being able to help you to confirm when a change in trend has taken place. Coming off of lows back here in April of 2013, here's your rising price channel. It's in blue. You see a break below that level right here on September 20th. It makes a new price channel on the way down. That price channel got broken right here in the trading session of December the 2nd out there. That was saying, okay, time to reverse course. It reverses course. Here it breaks through that rising price channel it had created. This is on December the 30th out here. Moves down. I don't have a price channel drawn in here at all. I'm not going to worry about that. That was pretty, well, we could do that. You could do it like this. Just simply, I'll draw a trend line out here, and we'll just simply connect the dots. There is your descending price channel, and that level was broken out here on January 14th. Now, it's still in a rising price channel. It has had that 100% move of a move. It's doing what it should do, which is to back off and move sideways. Light sweet crude will have turned, this is a daily chart on my screen out here, it will have turned to the downside if all of these patterns here continue to work, and they have in the past, if it breaks this rising price channel. Folks, have a great Thursday. Stay tuned. Our man Basil Chapman is up next. After Basil, we got Larry Pesavento, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.